Yes, good morning, guys. Good. I hope you had a good holiday yesterday. We are going to start with something interesting for today. We're going to start with sums. Yes, we're going to basically doing your chapter number 2, your basic rates of taxes. That is what we're going to be doing today, people. But yes, before I take you forward on the basic tax rates, there is something which I always thought about from inter syllabus. Yes, a very simple question which I always used to understand from myself as well when I was an inter student is what exactly is the flow of income tax? Yes, when you talk about income tax, you would have learned it in inter syllabus also, people. You learned rates of taxes, then you went to PGBP, CG, IFOS, capital gains. Most of the times it so happens that the subject is easy, so they keep switching around topics also. Yes, we suddenly do clubbing and then we suddenly go to chapter 6A. So there's no clear template on how it happens. Yes, and therefore normally it's a very big challenge to understand in income tax what exactly is the flow. When a person has to do income tax practically, what exactly should he be keeping in mind? Where should he be hitting first and when should he be going more? Yes, and so a flow of income tax becomes something extremely critical, at least from a practical standpoint. When I had this question for myself in inter, that's when I decided, you know what, let's cover the whole income tax together and let's prepare one template for ourselves which helps us understand how does the flow of income tax look like. Yes, that flow of income tax which I created for myself ended up at some point of time being called as the golden rules of taxation. Yes, so this golden rules of taxation is basically going to be a 30-step format, where in this 30-step format you're going to start understanding how should you be looking at income tax on a holistic level, as in where do you start and how do you end it. How do you end it? That is what is going to happen, people. So before I take you forward and start doing sums along with you, let's put out this golden rules into your material as well so that you have a comprehensive understanding on what is there. Basically, after you complete this 30 steps, your syllabus is over. Right, so the 30 steps will basically cover all your chapters in your syllabus except for the foreign laws. So if you ignore the foreign laws off, everything else will be covered in this 30 steps off. So you're going to write down these 30 steps, people, and you're going to understand how things operate from that extent. Yes, let's note down the 30 steps. Now I want to check this. Does your concept guide have a page in the last? Check karo. Is there an open last page? No. Solutions guide mein? Very few, right? ठीक है, फिर अपने बुक में लिख लो. You can write it in your own notebooks. I thought I had left one extra space, but ठीक है, no worries. 30 स्टेप है माँ. कहाँ पे है? ये पीछे चेक कर, लास्ट है ना. सॉल्यूशंस गाइड है क्या है वो? मॉडल 1 है ना? मॉडल 1 लास्ट पेज देखो क्या है क्या? अच्छा तुम लकी हो, फिर वहीं लिख लो. Yes. People, it's a 30 steps, so have it in a separate page. It's good for you to understand it all. Yes, we're going to start with the heading called as golden rules of taxation. People sitting online, I'm hoping you're also writing down. Yes, golden rules of taxation. Now I'm going to dictate it off, you can write it down quickly. Golden rules of taxation. Yes, yes. Step number 1. Step number 1. We call it identifying the question and its requirements. We call it identifying the question and its requirements. Identifying the question and its requirements. Now, in all practical sense, if you come and ask me, step number 1 has nothing to do with your practical world. Yes, this is more for your exam orientation, because the logic is very simple, people. As a student, we always have this hype in ourselves. Yes, when we know a concept way too much, we want to implement it way too much, right? And so a problem starts in exam is when you look at a question, you don't realize what the question is asking for. Yes, our question starts with very simply coming and telling there is a big fact data given to you. You've read the whole question and you've realized, okay, AOP taxation is going on, charitable trust is going on, MAT is going on, AMT is going on, additional depreciation dena hai, all these things you have discussed of. But by the time you completed the question off, you realized last line says compute PGBP, right? Which means you have ended up thinking everything in the world, and at the end of the day, you don't know what to do. Yes, so the first and the most important requirement as a CA final student is to first understand what does the question expect out of you. If the question is simply asking you on PGBP, don't dwell upon other things. That doesn't make sense. You're only going to waste time. Yes, I'm not saying you're going to lose marks because you're doing additional things, but you're simply going to waste time and lose marks in another place. So the first and the most critical thing is to always identify the question, which is why I have a small template. When you understand a question like question number 1, the compulsory question which comes in your exam, you should never start reading the question. You should always read the last line first. Should always read the last line first, because the last line will first tell you what to do with the question. The last line will come and tell you, should you be opting for old regime, new regime, go for MAT, not go for MAT, additional depreciation, lena hai, nahi lena hai. All those discussions happen in the last line. So without reading the last line, never go to the first of it. Are we making sense? That is how our approach is going to be in the classes also, people, but let's keep that in mind. Yes, with step number 1 out of the way, we understood what is happening. We go to step number 2, which is identifying the question, identifying the person, which is identifying the person and his residential status. Identifying the person and his residential status. Identifying the person and his residential status. Yes, something you have learned from syllabus itself, people. You want to start a question, the first and the most important thing is to understand who is the person. Are you talking about individual, HUF, firm, AOP, BOI, AJP, local authority? Everyone operates differently. A firm gets something called remuneration to partners. AOP does not allow that. When you come to companies, company cannot give any money to themselves because it becomes personal expenses. Sole proprietor is not allowed to withdraw money because it is called drawings. Every person has its own computation to work with, and therefore first thing is to understand who is this person. Along with that comes his residential status, because you and I both know if you're a resident you get everything taxable, but if you're a non-resident you're only taxable for a certain amount of things. At the same time, in a lot of places you would have learned that if you're a non-resident your benefits are very limited. You don't get, who told you that? You still get basic exemption limit, that is still there for you. What you don't get is you don't get rebate. You don't get rebate. You don't get a concept called as additional deductions like 50,000 of ATD. All those places where they talk about resident to senior citizen, you only get those benefits when you're a resident, which means senior citizenship itself is not a status for a non-resident. That's only a status for a resident. A lot of benefits gets denied to you as a non-resident. So those kind of things are to be kept in mind. Yes, yes, very good. Step number 3. Step number 3, determining if the income is taxable or not. Determining if the income is taxable or not. People, I'm assuming everyone has started using a black pen properly. Yes, please use only those pens which you're going to use for your exams. I don't want change of pens right now. Yes, so please determine whether the income is taxable or not. Now, question to you is very simple. I'm at step 3 where I'm trying to understand whether the income should be taxable or not. Where and all should you look for? Where and all do you look for to decide whether the income is taxable or not? 5 heads of income tells you what to tax. I'm telling you, should I tax or not is the first question mark. Yes, where do you check for this flow, people? First, very obviously, you'll go to residential status, because there is a concept called scope of total income. Income received in India, income deemed to receive in India, income accruing or arising in India, and income deemed to accrue or arise in India. When you say there itself that the income is not covered, it automatically becomes not taxable. Yes, apart from that, where do you go? You may have an income in India itself, but it may not be taxable. We call it, very good, we call it exemptions. Yes, so whether the income is taxable or not decides at 2 places. One is scope of total income and one is exemptions. Agreed? Yes, these are the 2 things you learned at inter level. Let me bring you something on the final level. We have 3 more concepts coming up at final level. On the board says advanced ruling. Advanced ruling is basically a board which has been established in India where non-residents can make an application. The NRs will make an application and they'll say, this looks like it may be taxable, but I don't think it is. I would like an expert opinion. This expert opinion is got from a person called as Board of Advanced Ruling. Board of Advanced Ruling. Now you may say, Rahul, expert opinion to CAs dete hain. You go to a CA to get it? No. People, CAs give you an experience of theirs. Board of Advanced Ruling is an authorized setup, which means if Board of Advanced Ruling says it is not taxable, it will become valid. It will become valid. Officers will have to accept it, which means they are more authentic. They are more authentic and has to be followed. So sometimes people also use Board of Advanced Ruling as an option to make sure that they are not taxable in India also. Yes. Now they will not give you an answer based on your comfort. They will give you an answer based on what is happening in the law. Yes. So that's how it works off. Next on the screen is safe harbor rules. Anyone? What's the safe harbor rules? My TP friend. Particular. Okay. It's a concept in TP, people. It's a concept in transfer pricing where basically what happens is income tax has said that when it comes to transfer pricing is a very litigative issue. Yes, I may come and say I'm making 15% margin. Officer may say, no, you should make 20% margin, which means nevertheless we'll always keep fighting. We'll always keep fighting. At a certain point of time, I want to get away with this fight. I'm bored of this. In which case, income tax itself has notified some percentages for some specific activities. Income tax itself notified percentages, and they said, you know what, if you're doing, let's say for example, low value adding support services, basically what you're giving employees to another country, payrolling kind of services, I will only want you to pay a minimum margin of 5%, which means government has given away his expectation. Government has told you make 5% margin. If you go to department and say, sir, I've made 6, government will say, amazing, I only wanted 5, no problem, I will not litigate. I will not ask anything more. But if you end up making 4, government will say, no, I don't accept, let's talk about this. Yes, I'm not saying they will automatically adjust it to 1, but they'll say, let's talk about it. Yes, so safe harbor rules is basically government's way of coming and saying, this is my minimum standard. You approve this for me. If you're ready to do this much for me, I will let you go. No litigation on you. Matter is closed there itself. Yes, now this is a concept which has come in for you people very specially. Yes, this was a concept it was never getting notified for the last 6 years of your syllabus. Safe harbor rules always used to come in the month of July, August, and therefore it was never applicable for syllabus. No one was ever reading it for exams. You people are the first ones to be lucky to do this, because this time when they introduced safe harbor rules, they introduced it for the next 3 years together. So they said it is applicable for the next 3 years, which means now you will be given a specific nature of services, and the specific nature of services will have a specific percentages. You will have to remember all those percentages for your exam. You will get questions on MCQ from there. Yes, so this is what you're going to learn in transfer pricing. It's a very beautiful concept, boring of the lot, but nevertheless it's an interesting concept in a practical setup. Yes, and that brings me to the last one, which is called APA. Any idea? Advanced Pricing Agreement. Similar to safe harbor rules, people, with an exception here. Safe harbor rule simply comes and says government's minimum expectation for everyone. Here is me going to government and coming and saying, sir, I'm doing a specific peculiar services. I have no idea what should be the margin on this, but I don't want you to fight with me also. I unnecessarily start the service, you start fighting with me, unnecessary waste of time for both of us. Today itself, I will come and tell you my nature of services. You tell me what your expectation is. If we both align on the expectation, you tell me you want 10, I am also happy with 10. We negotiate with each other, I will go forward, do 10. And if I'm doing 10, you will not object. You will not object, which means I am agreeing with government in advance itself, doing a handshake with government and saying, this is what I will declare to you. You tell me you are okay, I will move forward. If not, I am not coming forward. If not, I'm not coming forward. So this is also one way of countermeasure. Instead of going for litigations, I can try advanced pricing agreement. Yes or no? Yes. Last two concepts are part of TP, and the concept of advanced ruling is a separate concept altogether. We learn it in international taxations. Are we understanding all these things? Yes. We will give you explanations properly when we go to the topics, but interesting things to understand. Put it in brackets, note down everything. People, I hope you understand what is STI. STI is section number. Section number 5. Section number 5. Yes, scope of total income, exemptions, advance ruling, safe harbor rules, and APA conditions. APA conditions. Exemptions is part of? Part of that. Clear? Yes. Done with step number 3, people, which is what? Determining whether the income is taxable or not. Very good. Step number 4. From here starts your process. After you have decided that the income is taxable, we are moving on to step number 4, which is basically taking your incomes and then deciding which bucket it falls into. Basically your 5. Classify the income into 5 heads. Classify the income into 5 heads. Classify the income into 5 heads. Now, if you notice the screen, people, you'll see something else also in the same line, which says charitable receipts. Now, obviously, people, most of the persons who are going to offer income are going to be taxable, but there is a specific body called as charitable organizations, section 11 and 12 condition cases, where they've told you don't have a head concept itself. I'm giving you a certain amount of revenue. You take this revenue, and if you're promising me you will apply 85% of it, I will make you fully exempt. I'll make you fully exempt. In that case, people, I don't even have to bother about heads. I will take all my revenues and I'll put it directly as taxable. I'll put it directly as taxable, after which I will apply 85% to make it exempted off. So therefore it is given as slash charitable receipts. Charitable receipts is my way of coming and saying forget the heads, take the income fully taxable. Clear? Yes. Step number 5. People, you have taken all your incomes, you have put them into 5 heads. What is the next step? Obviously, what have you done is you have put only the revenues in your heads. You are yet to claim expenses. I told you, right? Incomes are defined under 224, but all expenses are under respective heads, which is what is step number 6. You're claiming all your deductions and application of income. Yes. So provide necessary deductions / application of income. Now, from an exam standpoint, step number 5 is the most important step. It's the most important step because one small mistake from your side and the whole total income will go wrong. Which is what, if you remember, people, yesterday, last class, we had a big discussion on which head to put it under. If you think about this, one small mistake from your side, head goes wrong. And if the head goes wrong, the deduction goes wrong. Think about the same example. If I told you rent from warehousing charges, had you put it under PGBP, you would have claimed expenses, which is wrong. Because if you put it under HP, I cannot claim any expenses. I am rather eligible for only 30% standard deduction. So a small mistake on classification, the whole deduction goes wrong. And if the whole deduction goes wrong, there is no point going forward. Everything else is wrong to that extent. Yes. So classification of heads become extremely important, after which claiming your deductions is the most critical thing. At a CA final level, people, this step number 6 is a giveaway step, which means you have to be very careful on how you apply this. A very simple example would be is that in this syllabus of CA final, you don't have salaries as a part of your chapter. They have not introduced salary as a part of CA final because they have told you have already learned it in inter. Yes. Apart from that, you don't have HP also. So HP and salaries are not part of your syllabus itself. Yes. But you will go to another chapter called DTAA, double taxation relief, and all questions will come from salaries HP. Which means even though you don't have it as a part of syllabus, you need to know it as a part of your syllabus. Now, they don't expect you to remember everything in salaries. They're not going to ask you specific adjustments on salaries, but they still expect you to remember it. Yes. And that's where the whole problem starts, because I don't know if you have read it, people. You would have learnt it in your inter times that standard deduction of salaries is 50,000. And then came in an amendment last year during your article stages, which came and said for very good. It came for 75,000 for the default tax regime. Now, it is not even part of your syllabus. You have never learnt it in your inter also. Getting a mistake there, horribly wrong. Double taxation goes for toss. Yes. Idhal people, the big problem which started. Luckily, when I'm starting this batch, it is already sorted off. 75,000 was not even notified for your syllabus. They missed it out. There was a pathetic drafting error. The drafting error came in such a way that this year they forgot to tell you that 75,000 is eligible. And therefore, for the first 6 months, everyone is running around the world, shouting and screaming, saying this year you will only get 50,000 for new regime also. But no one was aware about it. Kisi ko bhi yaad hai? Does anyone know? No. Because what happened, people, is when you read the act, there was a drafting error. When they changed the default tax regime rates in the current year, they said that the default tax regime rates is part of clause 3. Whereas the standard deduction used to say, I will only give deduction for clause 2. Now, clause 2 was last year's law. Up current year, when it was clause 3, standard deduction was not even notified, which itself means that you should have claimed only 50,000. No one was aware about it. The whole industry is sitting and claiming 75,000 on new regimes. Companies are doing 75,000. I went and I told my company that, boss, it doesn't make sense. You should not be claiming 75. You're technically doing illegal. Now, no one has a clear answer. You will only get the answer when the TDS return is filed. That to Q4, 24Q, which means you will only get the demand in March, next March. And at that point of time, imagine going to your employee and coming and saying, I made a mistake. I ended up claiming higher standard deduction. You have to pay me more tax. Employees will screw your life off. Yes or no? It became such a big issue in the market, but no one was talking about it. It is only at a certain point of time that income tax realized that we had made a drafting error, which is why got introduced the ordinance I was talking about. There was an ordinance which was then passed in August, where they came and confirmed saying, we made a drafting error. I'm sorry, you are eligible for 75,000 even under current year rules. So the whole ordinance itself was passed to clarify the standard deduction is to be claimed off. People today also don't know about that ordinance, and people still think 75,000 is eligible. Answer is yes, but only because of the ordinance. Had that ordinance ever been passed, you are still not eligible for that deduction. Yes or no? Yes. Now there is something which even ICA has not noticed right now. People, for those who remember this, in default tax regime last year there were two amendments. One was on the fact that standard deduction was increased from 50 to 75. Any other else amendment you remember? Computational level, income level, computational level. No. There was something made a change in family pension. There was a rule of family pension in IFOS which used to come and say 1/3 or 15,000, whichever is lower. And in default regime, that was changed to 25,000. That was changed to 25,000. Now see the funny thing. What has happened is this 25,000 also had the same issue, where it said it is only applicable for clause 2. They did not notify it for clause 3, which means now if you read family pension, it is technically only for 15,000. And funny thing is, ordinance they only introduced standard deduction. They did not introduce family pension, which means if you think about this, after the ordinance also family pension should be 15,000, should not be 25,000. Here's the funny thing, ICI launched its study material right now. What does the study material read? 25,000. The study material even now reads 25,000, and this is how ICI does. I'm not even kidding about it. Last year the whole study material was prepared, they said everything is fine. Suddenly on the day of exam, September 2024 exam, September 2024 exam, 1 month before, ICI releases a corrigendum on the portal without informing anyone, saying that there is a mistake which I have made in the act. I have not read the proper provisions of DTR. This is a small change to make in HP laws. They put out a corrigendum. No one is aware, including me. You know what happened? September 24 MCQ question. 3 questions came from that. 3 MCQ questions come from that. Students have done everything wrong. And suggested answers come and say, I informed the corrigendum, tumhari galti, tum dekhe nahi. Yes, that is how pathetic things are going on right now. Even now, no one knows that family pension is eligible for only 15,000. It is not even eligible for 25,000, and that too only for you people. If you think about it, it's only applicable for you people because next year the new income tax has come, and in the new income tax they have introduced 25. So the funny thing is, till last year it was 25. This year it is 15. Next year again it goes to 25. You see what is happening? Yes, this is what is called drafting of a law. Pathetic readings. When I show you the law, I'll explain you what is going to happen. But the point is, this is all something which you have to read and understand carefully from a drafting of a law. People did not realize this as a mistake because nowhere Nirmala ma'am told I am reducing it to 25. Nirmala ma'am simply forgot to make the change. Because she forgot to make the change, the understanding it is not there. Agreed, not agreed. Yes, when we read it, you will understand this better. But here's the point. Always talk about reading the heads properly and claiming its expenses rightfully. Claiming the expenses rightfully. Are we making sense? Yes, perfect. Move on forward. People, you have done all your deductions and all. You have received your 5 heads of income. Data has already come. You're clubbing your 5 heads of income. You are now going to move to clubbing rules. Yes, step number 6, club someone else's income. Club someone else's income. This is what we learned in inter called as clubbing of income. Now, like I said last class itself, people, something which was not even important at final level to be tested only at inter level, and this September exam they tested you on clubbing question. They tested you on clubbing question, out of the blue question for CA final students, but you got a question there also, which means now nothing is unimportant, everything is relevant. Everything is relevant. Not that it was a very difficult question, but still something which you should be kept in mind. Yes, step number 7. People, you have done clubbing. What is the next step you'll do? Claim your losses. You have your incomes right now, you'll claim your losses. So step number 7 says set off of losses / unabsorbed depreciation. Set off of losses / unabsorbed depreciation. Yes, now you would have done this at inter-level, people. 5 heads of income, did all your deductions and everything, got some income from heads, added your clubbing, claimed your set off. You arrived at what is called as GTI. Yes, full stop, continue. This gives you GTI, gross total income. This gives you GTI, gross total income. People, I have my GTI in my hand. What will I do? Can I pay tax? What will I do? Claim chapter 6A deductions. Claim chapter 6A deductions. claim chapter 6A deduction. People, is that the only deduction I have? I also have, huh? That's a tax credit, no? I'm still at income stage. At income stage, what can you claim? You can claim 10AA also. What is 10AA? SEZ deductions. Yes, so it is your chapter 6A deduction slash 10AA deduction, your SEZ related deduction. Your SEZ related deduction. Once I've done this, people, what do I have in my hand? I will have my total income. Yes, so this gives me my total income. This gives me my total income, which I'm assuming you read it in your inter, people, should always be rounded off to rupees 10. Should be rounded off to rupees 10. Section, very good, section 288A. Section 288A, which rounds off to the nearest 10. Clear? Yes, very good. People, what do I have in my hand? Total income. What do I start doing? I start computing my tax under, people, you're not doing individuals anymore, you are at final level. Yes, what do I have? Do I start computing taxes only under one regime? I'll have to check tax under two regimes. We have normal regime and we have special regime. Yes, normal regime being your Finance Act rates. Yes, so 25%, 30%, all those rates. And then you have section 115B. You are at final level. You're talking about companies. B, AA, B, AB. Yes, all those series is what you're going to talk about. Yes, yes. Step number 8. Step number 8. Compute tax as per normal regime. Step number 8. Compute tax as per normal regime. As per normal regime, within brackets Finance Act. Within brackets Finance Act. Within brackets Finance Act. Yes, now this is something which you should know at final level, people. Nevertheless, the point is very simple. Imagine if you're coming for an interview to me and I'm asking a very simple question. Tell me, what are the tax rates applicable? What are the tax rates applicable? You will first ask me the questions you should ask me, people, before you give me an answer. Type of the person. Very good. You're going to first ask me type of the person. I said I want individuals. Next you'll ask me tax rate. Pucha maine. Okay, normal tax rates. Age. Why? क्या करेगा? ठीक है. I just want to know what are the tax rates. You can give me everything, people. Don't give me specific ones. ये नहीं कि मेरे को सब बताने के बाद यही दूंगा मैं. When I'm asking tax rates, you can give me the whole list also. No, tell me what and all questions will you ask me. Which? Very good. First, you'll ask me which regime do you want it for. Do you need both the regimes or do you need specific ones? I said I want normal regime. Then the last and the $1 million question. For which assessment year do you want this data? For which assessment year do you want this data? People, understand this carefully. You are writing exam right now with me for assessment year 26, 27. By the time you clear your CA final and you approach the market, people would already be talking about 27, 28. Now, if you go to the examiner, you go to the interviewer and you come and say a rate, he will say, but I was expecting 27, 28. You are at a loss. You never ask the right questions. Yes or no? So first question to ask is which assessment year you're going to look for. Now, hypothetically, people, assuming you have read with me assessment year 26, 27, you don't know the rates of 27, 28. What will you do? Walk out of the interview? You don't know it. You don't have any chance itself. Now, you cannot blabber, definitely. Yes, you can't blabber about it, which means you need to answer the question, but be smart about it also. Yes, you need to show it to him that you don't know, but at the same time, win the interview. At the same time, win the interview. What will you do? Try. You're in interview right now. मैं stress interview ले रहा हूँ. What, everyone wants to fail the interviews or what? Pass होना है ना, कुछ तो try करोगे ना. You're sitting in an interview with me. I'm asking you. You're gonna stare at my face or what? I'm gonna cloak out the interview and I throw you out. What will you give me an answer? Instant response I want. नहीं पता. That's a standard response you'll give me. Yes, you'll be like, I don't know, I've not read it. Correct. Yes, people understand this carefully. When an interviewer asks you a question, it is not expected that you will know everything, because he will ask you a question which he knows. It's not required that you should have experienced that in your life. It is not just about the tax rates, people. It's also about any other provision. You might have let something on a choice. Can you skip off the interview for that? No. You have to be genuine here, but at the same time show him that you're ready to. An interview does not look for your answers. An interview looks for your learning stage capacity. Yes, here is an answer which I would normally give if I am sitting in that interview panel. I would say, I'm sorry, while the question is very valid, unfortunately I have not had the time to go through the new finance act because it was not part of my syllabus, but I do understand my shortcoming. I am happy to learn this. I'm happy to learn this. If you have an act in front of you, I'm happy to look into the act and give you the response right away. If that will consume time, I'm ready to go back and I would prepare a response and send it across on a mail if that makes comfortable to you. Tell me what happened. Tell me what happened. Did I ever lose the interview? I always told him I'm ready to give you the response right now also, or I'm ready to take it back home. I'm ready to take it back home. My intention of learning is already made proof to him, which means he is now understanding that yes, this person, even if he does not know, would be down to earth to come and expect it. Come and expect it. That is all that a person wants. Yes or no? Yes. Now here is the problem. You gave a statement saying you are ready to look at the act and give it to him right away. He brought an act also and he gave it to you. My question is very simple. Now you want to know the tax rates of normal regime. Where will you go and check? Where will you go and check? Income tax section number. That's the mistake which students do. Students don't realize the fact that the normal tax rates are not even part of the income tax book, because they're part of the Finance Act. They're part of the Finance Act. But that does not mean that it is not there, people. What you need to be smart enough to understand is the whole volume of Income Tax Act which they have. The last pages is nothing but the Finance Act, which means rather than going through the first pages and finding an answer, you should be looking at the last pages. The last pages will come and give you the Finance Act rates. You simply have to go to the Finance Act, part number part number 3. Yes, part number 1 gives you the old tax rates. Part number 2 talks about all your TDS. Part number 3 gives you the latest tax rates, and part number 4 talks about your agricultural income rates. Yes, so you will immediately go to part number 3, and in that part number 3 you will try to find where the rates are. You will read that rates in front of him and you will tell him this is what the rates are. This is what the rates are. People at final level also don't end up realizing the fact, people, that normal rates are not even part of income tax. There is no section to look at. You have to go and refer your Finance Act. You have to go and refer your Finance Act. Are we making sense? Yes, which then brings the question. Rahul, you're trying to answer a question on assessment year 27, 28. Which Finance Act should you be looking at? So, which Finance Act should you be looking at? Number 20? 20? Hello? 20? You are writing exam for Finance Act 20? 20? You are writing exam for Finance Act 2025, assessment year 26, 27. Apo your assessment year will be 1 year before, which means whatever is your assessment year, the Finance Act is 1 year before. The Finance Act is 1 year before. So if you're sitting in front of him for assessment year 27, 28, you are asking for Finance Act 20. Appa. Yes or no? Yes. Be careful, people, because that guy also, when he gives you the act, he may end up giving you an old act. You start searching on it, you give him a rate, he will throw you out because you have not even read what act you're looking at. Yes, so be very careful on reading what the Finance Act you're asking for. If he's asking you a Finance Act 26, then only you can give him assessment year 27, 28. Yes, so no, be smart on these kind of things, people. Clear enough? Any doubts on this? Yes, very good. Step number 8 gives me compute tax as per normal rates. Next, step number 9. What will you do? Compute tax as per people, when you're in normal rates, there is also another expectation out of you from government called as, very good, called as MAT and AMT. Step number 9 is compute tax as per MAT and AMT. Compute tax as per MAT and AMT. A MAT applies for, very good, MAT applies for companies, AMT applies for AMT applies for AMT applies for AMT applies for anyone other than companies. It applies to a firm also equally enough. It applies to a firm also equally enough. It applies to any single person other than a company. So it applies to AMT for anyone. Yes, people at CA final level, your question number 2 would be on MAT and AMT related questions. And their AMT question, if it's asked, it's not going to be individual. It's going to be a firm question. So when you look at a firm question, you have to compute AMT as well. Are we clear? Yes. Next, people, you have done MAT AMT also. Tax as per step number 11. Compute tax as per special tax regime. Nothing but your 115BA series. People, on the top of your head, BAA is for domestic companies. BAB is for domestic manufacturing companies. BAC is for very good, other than companies. BAD is for any idea? BAD is for domestic cooperative societies, and BAE is for domestic manufacturing cooperative societies. If you understand this carefully, people, BAA and BAB is nothing but BAD and BAE. If a company does it, then it's BAA and BAB. If a cooperative society does it, it is BAD and BAE. That is how the template format is. Clear? Yes. Next topic, we will be discussing it out here. Yes. Now, people, I have computed tax as per old, computed tax as per MAT, computed tax as per special. How do I find what is my tax liability? Which of the three is right? Whichever is higher. Very good. It is the first two, whichever is higher, compared with the third one, whichever is lower. Because if you understand, people, for ones who are opting for special regime, MAT and AMT is not applicable, which means you'll check for normal and MAT, whichever is higher, because that is the minimum expectation. But that would give you tax as per old rules. Then you will check as per new rules and tell whichever is lower, because I want to pay the least tax. Agreed, not agreed? Yes. Step number 12. Step 9 versus step 10. Step 9 versus step 10. Whichever is step 9 versus step 10, whichever is higher. Step 9 versus step 10, whichever is higher, versus step 11, whichever is lower. Versus step 11, whichever is lower. Versus step 11, whichever is lower. Are we clear? Yes. Now, people, at this stage, what have you arrived? What have you arrived at? You have arrived at what is to be paid. What is to be paid. Now, you need to, you know what is to be paid. What will you do? Slip on it. You will pay it off. How and all can you pay the tax, people? By TDS, TCS, advance tax, self-assessment tax, FTC, very good, foreign tax credit. Next. Very good, MAT and AMT credits. You have already paid it in the past, you can claim it in the current years. Yes or no? Yes. Step number 13. Claim TDS, TCS. Claim TDS, TCS, advance tax. Claim TDS, TCS, advance tax, self-assessment tax, FTC. What is FTC? Foreign tax credit. Section number Any idea? Any idea? Any idea? Any idea? It's not a section itself. Section itself. It's rule 128. It's rule 128, which gives you the form called 67. It gives you the form called 67. Yes, the powers of it comes from rule 9, section 90 and 91. The powers of it comes from section 90 and 91, but the rule is 128. 128 gives the powers to form number 67 to give the FTC credits. To give the FTC credits. Yes. After that, people, you have something called MAT and AMT credits. MAT and AMT credits. And then two items which probably you should have known, but you're forgetting it off, called as rebate under 86. Now, people, you are thinking rebate under 87A then. Yes, this is not that. This is not that. This is rebate under 86 for AOP BOIs. For AOP BOIs. AOP BOI have a special rule called as claiming rebates under 86. What is it? We will discuss in detail. Yes, but this is a rebate given to you if you're a AOP BOI member. If you're an AOP BOI member, so that's a rebate under 86. And the last item called as, what the hell is this? Very good. This is your agricultural income credits. This is your agricultural income credits, which is called partial integration. Which is called partial integration. Yes. So people, you have now had a tax. You have also paid your taxes off. You've also paid your taxes off. What is the next responsibility? That's all. You paid the tax. Might is over. Yes or no? Yes. You need to inform someone. Whom do you have to inform? Hey, you have paid your tax. Whom do you have to inform? How? Yes, you can't just pay the tax and leave it off, people. You need to also file a return. Yes, before that you have to do one other step, which is called step number 14. This is called step number 14, that is adding your interest and the late filing fees. Adding your interest and the late filing fees, because obviously if you have not paid things on time, you have implications coming and they're not going to let you go. Yes, so you're going to add your interest and late filing fees, and this is what is going to be your final tax liability. This is what is going to be your final tax liability, which in income tax rules always gets rounded off to the nearest 10 section. Very good. Section 288B. Yes, so you'll add your interest, late filing fees. This will become your final tax liability, getting rounded off to the nearest 10. Getting rounded off to the nearest 10. Now, people, you're obviously going to file a return, but you can't do it just like that. You have things to do. Things like getting a report called as getting a tax audit report. Getting a tax. You can't file a return without that, no, people. You have tax audit report obligation. So you have to obtain some certificates from CA, items like tax audit report. Then what else have you heard about? What and all certificates do you normally issue as a CA firm consultant? What certificates have you issued, people, during return filing time? During return filing time, what and all certificates have you issued? अपने experience में क्या क्या किया हुआ है? Only tax audit report. Form 10B. Acha, okay. Form 10B, which is given to a charitable organization. Next. For 1023C. That is 1023C. Next. What is 10IC? Is the CA giving it? Or is it a self-certification form? That's a self-certification form. It's not a CA form. It's me who is going to come and tell I want to go for which regime. That's not a CA certificate. Next. What CA certificates have you read? 3C EAB, master file. Master file is not a CA certificate. I'm asking you what CA certificates have to be issued. 3C EB has to be issued, transfer pricing auditor report. You have to give a TP report, TP certificate, not a TP report, TP certificate. Next. What else have you learned? इतने ही certificates issue किए हुए हैं. Any other certificates you have issued in your practical? Tax certificates. Anything else? Anything else? No idea. No idea. Have you never issued a certificate for 80JJAA? Okay. There is a certificate for 80JJAA called 10DA. You have to give a certificate for that also. You have to give a certificate for that also. Anything else? There is a certification for slump sale also. You have to confirm his net worth computation as a slump sale model. So that also has a certification. That also needs to be given out. And the biggest certificate is that if you're opting for MAT and AMT, you need to issue a CA certificate for that also. MAT and AMT also has a CA certificate, mandatory to be given. 10AA has a CA certificate, 56F has to be given. These are all the certificates which are applicable to you, which means anything extra are you doing, you need a CA certificate. All these certificates are mandatory before you file a return. Without this, return will become defective. Return will become defective. You can't let go of these kind of things. Yes, so obtaining a CA certificate, items like TAR 3CB 10B etc. By the way, the 10BB is not more valid anymore. 10BB band ho gaya. When you're less than 5 crores, you don't even have to get a CA certificate. That's an automatic exemption. The 10BB was there when 1023C entities, hospitals and all, were actually opting for 1023C. But then last year when they moved away and moved to 12AB, they are no more eligible for it. So 10BB form ही नहीं है अभी. किस साल क्या था? इस साल क्या था? नेक्स्ट साल से नहीं है. 25-26 से नहीं है. We are doing 26-27. 25-26 से नहीं है. Yes, Prem. 15CB is not something you do during return filing stages. No, that's a regular certificate. It's definitely a CA certificate, but that's something which you give on a regular basis, meaning every transaction you have to give a 15CB. Okay. Perfectly valid. Yes, yes. People have got all my CA certificates. I'm ready to file my return of income. But is that the return only which I'm going to file? I'll also have some additional forms to file along with returns, like 10IC to opt for my regimes. Anything else? 10? Whatever. If you want to go for new regimes or old regimes, those forms. Apart from that, people, there are some additional forms to be filed, specific in transfer pricing, called as master file. Next. That's all. What is 67A? SFT does not happen during return filing. It happens during 31st May. Anything else? Company? Very good. There is something called CBCR, master file, and CBCR are the normal reports which has to be filed off during your filing stages. Yes, so there are multiple certificates which go across people. When you enter an MNC level, these are the certificates that you have to keep in mind. You have something called CBCR, which is for TP reporting. You have something called master file, which is for TP reporting. SFT happens on 31st May. You then have your forms for filing your regimes. These are all the certificates that are mandatory for you to file off before you can proceed forward on things. Apart from that, yes, if you're a license office, you have 49C. Yes, if you're a license office, you have a certificate form. If you're going for something called substantial holding in India, then you have a different form for those. Those forms are also there, but again, not an important thing at this stage. These are the certificates which you have to mandatory file off before you file your returns. Again, not filing these will automatically make you defective on the returns, They also have penalties on it, people. Yes, not filing master file and all can cause you 5 lakh worth of penalties straight out for you. Not filing CBCR as a simple notification also can have you 2% of your international transactions being reported as a penalty. So these are all forms which you have to keep in mind when you enter an MNC culture. Yes, so it is filing of returns and forms. Does anyone know SFT? What is SFT? Don't give me the full form. It's not specified. It's statement of financial transactions. Any idea? No. People, have you done it, by the way? You know you should have done it. Any person liable for tax audit is mandatory to file a SFT form. It's a mandate on 31st May. If you're not doing it, you're already in penalties. Yes, SFT is basically a form, people, where a certain amount of transactions have been reported, and they've told for these transactions, if you're entering into any kind of discussions, you need to make those reportings. A very small example would be any person liable for tax audit needs to file an SFT and confirm in that whether he is doing any cash transactions. If he does not report that, he is automatically liable for penalty. Now, even if you don't have a cash transaction, you still have to file an SFT confirmation. There is something called a confirmation where you have to just say yes, no, not applicable. That is the bare minimum to be done. It's called preliminary response. If you have not done that also, SFT is a 100% penalty case for you. You have a daily penalty on it. For you to pay off. 1,000 rupees daily penalty will be levied for you to not file your SFT forms off. Apart from this, people, for those who realize it, now if you know your income tax return is giving pre-filing options. where it is automatically reporting your capital gains, your interest, your dividends and all. Why is that pre-filing happening? Because the other person has been made a mandate for SFT filings. The other person, the person who's doing bank transactions, the person who's running your share market, those people have now been made a mandatory reporting, that they have to report all those transactions in an SFT form. If they don't do that, I will not get a pre-filing option. Yes, so SFT basically is now helping everyone for a pre-filing enablement. If you have learned, the form is form 61A. The form is called 61A. The form is called 61A and 61B. Yes, there is a form called 61A and 61B. If you're liable for the transaction, if you're not liable, then it's a preliminary response. You just have to go into the portal and press yes or no. Due date for filing is 31st May of the assessment year. 31st May of the assessment year. If you have not done it, please go check. Please go check. It's a very important form for you to file off. Yes, yes. Even if you don't have transaction, I'm clarifying this once again. Even if you don't have transactions, you have not done any of the transaction, you still have to make that filing and confirm that you have not done any of those transactions. It's a mandate. Yes, yes. Apart from that, people, some other items which are there in that form is about companies. Companies, if they have issued any shares, if they've issued any debentures, all those reportings also have to be done in an SFT filing format. They have to do all those things. Apart from that, if you're receiving loan from someone, then because of 269 ST reportings and all, you have to file those also in an SFT filing format. So those things are there in the format template. Please look into this. Yes, good. After you filed your returns, people, you now are ready. You're done with everything. You're done with everything. You may have some made mistakes, which means you'll try to file a next step is filing a revised return if necessary. Filing a revised return if necessary. Filing a revised return if necessary. And at this stage, I also told you people, it may be possible that a return may have mistakes. Not the mistakes which you are talking about, mistakes like having defects, in which case you'll try to rectify those defects. You'll try to rectify those defects. Any idea, people? Time limit for rectification? Rectifying defects, not the return. Any clue? 4 years, that is rectification order. I'm talking about rectifying defects in your return. "15 days. You'll be given 15 days time limit to rectify your return in the defect in the returns. If you don't rectify the defects within 15 days, it will be assumed that the return is invalid. It'll be assumed that the return is invalid, which means you have never even filed a return. You have never even filed a return. Always watch out for a defective notice. It comes in the immediate second. If you have filed a return, in the next 30 seconds, you'll get a defective notice. Now the system is that configured. Within 30 seconds, you'll get a defective notice under 139.9, where they'll say you have made a defect. Please rectify it in the next 15 days. If you have not done it, I will treat your return as invalid, and that's a serious crime. If the return becomes invalid, it will be assumed as if you never filed it itself, which means automatically all penalty prosecution cases will start up. All penalty and prosecution cases will start up. It's a very, very important thing to be kept in mind. At least in the past and all, people, defective return notices and all would come like 6 months later, 8 months later. But now income tax has configured in such a way, you file the return, 30 seconds later you'll get the return defective notice. Yes. So if you have missed out to file a tax audit report, any certificates and all, immediately 30 seconds later they'll give you a defective notice. They'll say you filed your return, but you forgot to file tax audit report. We will not accept the return. You file your tax audit report and then only we'll accept the return. Otherwise, return becomes invalid. The return becomes invalid. Are we clear? Yes, good. You have filed your revised return also, people. Matter is over. Matter is over. Now, at this stage, if you realize you may have made some mistakes, not in the sense that you have made mistakes which you want to claim, mistakes in the sense that you have underreported incomes, and you have realized that you have underreported incomes, you voluntarily want to go and declare your additional incomes to income tax department. You can now use an option called as updated return. You can now use an option called as updated return. This year there was an amendment in updated return. Anyone? Earlier, Variko, you can only file updated return for the last 2 years. Now you can file updated return for the last 4 years. You can file updated return for the last 4 years. Last 4 years can be picked up for updated returns and can be filed off. That is the benefit which has been granted right now. Yes. So it is filing of updated return for miss outs. Filing of updated return for miss outs and paying additional taxes. Filing updated return for miss outs and paying additional taxes. Yes, here is where my inter-level syllabus is done. I'm done with my inter-level syllabus, where I have now filed my return. My matter is over. Yes, this is what you would have learned at inter stages, people. From here starts your Final process. From here starts your final process. Now people, normally if you understand this, I've already filed my return, my matter is done. My matter is done. Will the officer let you go? You have done a self-assessment, which means officer also wants to verify facts, which means he will now pick you up for assessment. So this step is something which you probably will not be aware about. Let me give you the steps. Let's write it down. Step number 19. Step number 19 is receiving intimation under 143(1). Step number 19 is receiving intimation under 143(1). Step 19 is receiving intimation under 143(1) and notice under 143(2). Receiving intimation under 143(1) and notice under 143(2). People, anyone who's done this practically knows what is 143(1) and 143(2). Very good. 143(1) is basically you coming in CPC, centralized processing automated system is basically processing your returns and trying to find out if there is any minor mistakes. They will try to rectify those minor mistakes and they will give you your demand notices. At the same time, even if you have no mistakes, to say that yes, your return is perfectly right, they will give you an intimation confirming what is your refund due along with interest. That will happen in intimation under 143(1). Intimation under 143(1) is a mandate to be given for every single return, whether you are doing it valid or you're doing it invalid, whether there is a demand or there is no demand, it doesn't matter, it has to be given out. Yes, very good. Next. Very good. 143(2) is basically giving you a notice to confirm that I want to pick you up for assessment. This does not happen for everyone, it happens to a selected group of people only, which means if your case is getting picked up for scrutiny, your next 12 months is screwed off. Yes, now you're going to be asked a hell lot of information to prove the fact that you are doing a genuine filing. Yes, so that is what this comes and talks about. Any due dates? 30? Due date for 143(2) is 30th June. It's 30th June of the next year. 30th June of the next year, which means if you filed your return in this year, next year 30th June they have to confirm to you that you're picking up for assessment. If you don't get a notice by 30th June, it is assumed your return is cleared. Your return is cleared, you will not be questioned anymore, which means they have time limit of 3 months. From the end of the year, it is 3 months. Yes, 143(1). Very good. It is 9 months from the end of the financial year, which means my notice for picking up of assessment will happen before my intimation. My intimation will happen by the December of the next year, but my notice will come in by June of next year, which means I will have my notice of scrutiny well before my intimation. That is how it was normally designed. However, nowadays it has changed. Nowadays, the system has become that fast that if you filed a return today, tomorrow you'll get the intimation of. Yes, they've made it that simpler. The time limit is extended till 9 months. They'll give you time limit till 9 months, but you can also get your intimation within the next day also. Now, where does the intimation get delayed? Where do you get it only after 9 months? Is when you filed a revised return. Yes, if you filed only one return, people, 99.99% intimation will come in the next second itself. Yes, if it's a case, and I think if I understand this properly, for assessment year 25-26, if your refund is less than 25,000, something like that, if your refund is less than 25,000, within 8 hours they'll process your returns off. Within 8 hours they'll process your return and the money will come to your account. If it goes more than 25,000, they will take a little more time. Yes, maybe a month or 2 months more. So those returns will get folded off. But if you're a person who's going to end up filing a revised return, do not expect money right away. Intimation will come for its sweet time. They will take time until the next December to clear it off for you. Yes, so that is how the process is being looking on for intimation under 143(1), which means they have made a specific design in the intimation to say refund in the amount, hold it back, refund in the amount, give it away right away, and something like that. Now, one thing is to be understood, people, despite the fact that you've received an intimation, it does not mean that you will not get picked up for scrutiny. Even if you have got the intimation today, by next 30th June, they can still pick you up for scrutiny. That is perfectly valid, which means these both are dependent activities or independent activities. These both are independent activities. Nothing has to do with anything. Yes, you can get a notice before intimation. You can get an intimation before notice. It doesn't matter. Both will work parallelly. Both will work parallelly. Are we clear? Yes, perfect. Moving on. Step number 20. Step number 20. People, I have been picked up for scrutiny. What will happen? Officer will come and ask me questions. Officer will ask me questions. That will happen in step number 20. Queries will be raised under section 142(1). Queries will be raised under section 142(1). queries will be raised under section 142(1). Also at this stage, officer can decide that he wants to refer the case to a TP matter, so full stop, case referred to TPO. What is TPO? Transfer pricing officer. Very good. Yes, case gets referred to TPO if needed. Section, friend, referring the case to TPO section 92. Very good. Yes, case gets referred to a transfer pricing officer if needed. Section 92CA takes care of that powers. So assessing officer will transfer this case off to a transfer pricing officer and say, there are some transactions which I'm not very comfortable. Why don't you verify it from an international transaction perspective and check for its arm's length pricing? Yes, the moment the case gets referred to TPO people, you automatically get an extension of due date by 12 months, 1 year fully gets extended off. Nevertheless, that's not important at this stage. Yes, step number 21. People, all notices have been done, response have been made. I have given my submissions. Officer can do two things. Either he can accept my submissions or he can change some adjustments. All those will happen by passing a assessment order. AO order is passed under section 143(3). Yes, so step number 21, assessing officer order passed under section 143(3). AO order passed under section 143(3) slash 144 slash 144. Very good. Yes, 144 is nothing but best judgment assessment. Best judgment assessment is basically where officer is asking you queries. He's trying his level best to ask you queries, but you are being egoistic. You are not submitting any response. You have ghosted him completely. At this stage, he has an obligation to complete the assessment. In which case, he will say, boss, if you're not giving me any options, I don't have a choice but to do it on my free will. I don't have data. I will do whatever I want. That whatever I want is called as best judgment assessment 144. 144 happens there. Yes, all these is what we will be discussing in a specific chapter, people, but I'm just giving you the flow on this. Yes, apart from that, what can happen is, if my case has got referred to TPO, then I don't have an option. TPO will now pass something called as a transfer pricing order, which will be taken up by my assessing officer, who will pass a draft order. He'll pass a draft order. Yes, full stop, continue. Draft order if TP issues. Draft order if TP issues. Draft order if TP issues. People, I have received an order in my hand. I am not happy. What and all can I do? I can go for an appeal, or I can look at the issues. I will always look at the issue, people, and ask myself a simple question. Is the issue significant or is the issue very stupid? If the issue is very stupid, I will say this is a mistake. There is no requirement to go for an appeal. Let's ask for a rectification. Yes. But if the issue is a legal matter, I'll have to go for an appeal. Yes. So that is what will happen. Full stop. Request rectification for mistakes. Clear? Yes. Now, people, this is a normal process. At a normal process, this is what will happen, and an assessing officer order will get passed. What are the extraordinary processes which are there in income tax? Is this the only assessment which can happen in income tax? What are the other assessments which are possible? We have a 147. It's called a reassessment order. People have already passed an order. I made some disallowances. Some years later, I realized this is also missing. I should have done this also. This also can be done by a new order called as assessment order, happened under section 147. Next, people, there was a raid at my house. Search and search taken place. Now I will not have a normal order. I will not have a reassessment order. We have a new concept introduced last year called as, very good, it's called as block assessment. Last 6 years together will be picked up. All last 6 years will be picked up together, and they will start making tax computations on those. That is called as search and seizure block assessments. Yes. Apart from that, people, your assessing officer order has been passed. The boss of the assessing officer, who is it? Very good. CIT and PCIT. The boss of the assessing officer has found that this guy has not understood it properly. He should have made 5 more disallowances. He forgot to do it, which means he's saying that the order is not complete. The order is not complete. In income tax, we call it erroneous. We say that the order is erroneous. The boss can intervene now. The boss will intervene and come and say, your order has not been done properly. I would like to make some additional adjustments. This is called as Revisionary proceedings. It's called as revisionary proceedings. All this can happen in income tax, apart from one very, very critical thing called as GAR assessment. Called as GAR assessment. Any idea? No idea? People, you have been doing some transactions which is not legally disallowed, which means you are ready, you are okay to do it. You are basically doing the wrong thing in the right way. You're doing the wrong thing in the right way, but looking at the transaction itself, one can tell, yes, you're doing something wrong. In which case, income tax has now introduced a generic law called as GAR, General Anti-Avoidance Rules. General Anti-Avoidance Rules, where income tax will come and say, this transaction is not legally disallowed, meaning you can do it. But looking at the transaction itself, it looks very clear that you're trying to cheat me. You're trying to cheat me. I will now be given arbitrary powers. Even though I am not allowed to do anything, I will now take up an additional power called as GAR assessment, where I will make a change. I will make a change, which means I will treat this as an invalid transaction. I'll treat it as an invalid transaction. We do it by something called as GAR assessments. We do it by something called as GAR assessment. All this can happen in income tax, people. Yes, these are some additional steps which can take place on you. Step number 22. Step number 22. Reassessment for income escaping assessment. Reassessment for income escaping assessment. Revision for erroneous order. Revision for erroneous order. Block assessment for search and seizure. Hey, what is search and seizure? Search and seizure is nothing but raid. Yes, that's an English way of putting it out. Block assessment for search and seizure. And finally, anti-avoidance for GAR rules. Anti-avoidance for GAR rules. Anti-avoidance for GAR rules. Yes, yes. Here is where you are done at assessing officer stage. Now starts the whole process. People, I am super pissed with the order. I am not happy with the order. I'm not happy with the order. I will go for an appeal. I will start going for an appeal. Starts step number 23. First appeal goes to CITA. First appeal goes to CITA. First appeal goes to CITA within bracket for the final order. Yes, first appeal goes to CITA for the final order. Now, people, if you remember, I remember telling you, when we do TP assessment, we get in hand something called as draft order. Now, against a draft order, can you go to CITA? No. We now have an alternate dispute resolution mechanism called as DRP, Dispute Resolution Panel. Dispute resolution panel, where you can go to him for a transfer pricing matter. You can come and say, sir, I have a draft order, I would like to go for a transfer pricing matter to you. This is called as DRP. This is called as DRP. Yes, so you can go to DRP for a draft order. You can go to DRP for a draft order. Yes, but there is also one other thing, people. This is something which not many people are aware about, and justifiably so, because one of the most useless things ever introduced in income tax. You have told that an boss of the officer can come forward and come do an assessment on you. That is called 263. Here is me coming and telling, boss, I would like to approach the boss. Who am I? Assessee. Assessee would like to approach the boss and come and say, sir, your officer is there. No, he's stupid. That guy is being completely stupid to me. Why should I waste time going on an appeal? By looking at this order, you can itself tell that he's being stupid. He's being stupid. So you itself go and complain to him, and you ask him to correct the mistakes. You ask him to correct the mistakes. Now, this is an alternative to CIT route. This is an alternative to CIT route, which means in CIT route, I'm going and fighting legal issues. But during the boss approach, I'm going and telling him, sir, the order itself is stupid. You will also accept it. You will not have any objection here. You will also accept it that it's a stupid order. You should have asked your junior to do it properly. This is called, again, revisionary proceedings. The difference between the previous one and the current one, people, is in the previous one, revisionary proceedings will be done by him on me, which means there he will do favorable things or unfavorable things. Unfavorable things. Here, revisionary proceedings, I am asking the boss to go and do some changes. This is me asking for a favorable outcome. This is me asking for a favorable outcome. So when you do it under 263, the boss does it unfavorable. But when I do it under 264, I am requesting for a favorable case. I'm requesting for a favorable case. Question for those who know. People, can I go CIT and revisionary together? Can I go CIT and revisionary together? For some cases I want to go to CIT, for some cases I want to go to revisionary. Can I do that? No, not allowed. This is an alternative route, which means either you decide you go for CIT or you decide you go for revisionary. You can't choose both. You can't choose both, which is why no one goes for revisionary. Absolutely no one goes for revisionary, because there is one big problem here. The big problem is, if you go for revisionary and the boss does not agree, the matter will close. You don't have any other options. You will not be able to make a further appeal, which is why people choose to go for CITA, because at least if CITA does not permit, I will end up going to ITAT. Yes, so my appeal mechanism will stop at revisionary proceedings, which is why this is a section which is there, but no one uses it. Absolutely no one uses it. It is not worth it itself. It's not worth it itself. Any doubts? No. So I'm going for CITA. Yes, Prem.
With the revisionary order, we can't go to ITAT.
No. Anything passed in revisionary is a final order. The maximum you can go is, after revisionary, you can go to High Court as a writ petition, but you will not be able to approach it legally.
Okay.
Yes. Now, people, you will go to CITA or DRP. Time limits. Very good. Time limit is 30 days. To file a CIT appeal, you need 30 days. To file a DRP order itself, 30 days. It's 30 days for the end of the date, 30 days from the date of order. It is 30 days from the date of order. Are we making sense? Yes. Now, people, I know I'm spending too much time. We have spent 1.5 hours just to write the steps off, but I'm assuming you're already understanding the flow. Yes. This whole thing is helping you understand the whole income tax process. So when I start taking chapters, it'll be very easy for me to connect this properly. कि हम लोग ने ये यहाँ पे किया था, ये यहाँ पे किया था. That is why we are spending so much time on this. Yes. But the flow is coming out very beautifully. Correct? Yes. Good. Step number 24. People, I have at CIT appeals not got my order favorable. No other options but to go to ITAT. Now, this ITAT order, I can go against two parties. One CIT, one DRP. I can't go against revisionary order. Yes. So it is appeal to ITAT against CITA, DRP, GAR, 263. 263. Let me explain the last two for you people. First is CITA and the DRP, which you and I understood. Look at the GAR rule. Now, people, GAR is being done for what? To comment on your anti-avoidance measures. Now, in income tax, they have confirmed that if a GAR assessment has to happen, it cannot happen by assessing officer. It has to happen by an approving panel. And the persons who are sitting in the approving panel are CITs. Now tell me this carefully, people. I have got an order from the CIT panel. Can I go to CIT appeals and say, sir, I want to object it? They both are sitting at the same level, which means I'll have to go one approach above, which is nothing but ITAT. Agreed? Yes. Similarly, people, think about this. When I go for an revisionary proceedings to CIT, no further appeals can be made. But when the CIT is doing revisionary proceedings on me, who's passing the order? CIT is passing the order. Can I go to CIT appeals? Can I say, sir, your person sitting next door is not happy? Can I do that? No. I can only go for one step above, which is ITAT, which is why for 263, there is no option to go to CIT. There is only option to go to ITAT, because it's an order passed by same level. Yes or no? Yes. This is a very beautiful 4-mark question in exam. Yahi pe khatam ho gaya. Yes. You will get a question in exam where they'll come and say, this is the order passed. Tell me who can you go for an appeal. If you've understood this, you've already got the answer. 4 marks, simple, straightforward from here itself. Clear? Yes. So you go to ITAT. Time limits. Amended time limits. 2 months from the... Very good. It's the amended timelines of last year. The ITAT appeal time limits have now become 2 months from the end of the month in which the orders are received. 2 months from the end of the month in which the order is received. Yes, all these timelines will be important for your exam. We are going to prepare a summary note. In a summary note, we'll be putting out all timelines together. So right now it's not important, but you should know all these things. Yes, so it is an appeal to ITAT against CIT, DRP, GAR and 263. People, I am not happy with ITAT order approach to High Court. Yes, so this now becomes an appeal to High Court against ITAT. Appeal to High Court against ITAT. Appeal to High Court against ITAT, advance ruling. An amendment of 2 years ago, people. An amendment of 2 years ago. If you remember, we discussed about advanced ruling. Where did we discuss? Step number 3. We discussed it in step number 3, where I told you advanced ruling is nothing but non-resident can approach a panel and come and ask, decide whether my income is taxable or not. Decide whether my income is taxable or not. Now, at that stage, people, imagine what has happened is the advanced ruling has come and said, no, it is taxable. But I am not happy. Can I go further? Can I go further? Until 3 years ago, they would not allow you. They would not allow you. They will say advanced ruling has said, therefore you can't go. Yes. But 3 years ago, they gave you an alternative mechanism where they said you can still approach the courts. You can still approach the courts. So 3 years before came in an option where they said you can now directly approach High Court. You can directly approach High Court, which means an advanced ruling order will not go to CIT, will not go to ITAT, will directly go to High Court. Will directly go to High Court. So that is why advanced ruling is sitting on this stage. Clear? Yes. Finally, people, after the advanced ruling is done, you sit on. See, after the ITAT, after the High Court order is done, you will move to Supreme Court. Final authority, you move to Supreme Court. You move to Supreme Court. You move to Supreme Court. People, timelines for High Court and Supreme Court, anyone? No? Unfortunately, the timelines are not notified in Income Tax Act. Income Tax does not even have the timelines. Income Tax has said the appeals will be decided based on Civil Procedure Code. Yes, and Civil Procedure Code comes and says to a High Court you can appeal up to 120 days. So you'll have 120 days time limit to appeal to High Court, and to Supreme Court it is 90 days. It is 90 days. So earlier it was read like this, people. It was read as 30, 60, 120 and 90. There was a switch in the middle. Now it is 32 months, 120 and 90. That is what the time limits are. Yes, now again, not relevant for your exam, but good to know. Good to know. People, Supreme Court is also done. What will happen? Nothing else can happen. At this stage, what will happen? After all the appeals is done, you will go back to the officer and you will come and say, sir, this is the outcome of the appeal. This is what I would like to pay you right now. This is what I would like to pay you right now. This discussion which are happening with them happens by way of a GEO, or we call it OGE. Or we call it OGE, you call it GEO or you call it OGE. GEO is nothing but giving effect order, or OGE is called order giving effect to. Both means the same. Yes, it's a very fancy English which we use in market. Yes, so what happens at 227? You will receive a giving effect order.
So,
yes,
forget ICJ.
I forgot.
ICJ.
Oh, it's not part of the, see, that's what I told you, that only happens for cross-border transactions, right? So ICJ is not a normal practice which anyone goes for. That's why I'm only trying to give you the format which is happening in income tax. It's a valid thought, but yes.
Yeah.
Perfect. Yes, where am I? Yes, 27, receiving a giving effect order. People, at this stage, nothing else can be done. So I receive a giving effect order. I'll have to pay off my demands, or if I'm eligible for refunds, I can get back my refunds. If I'm paying my demand, I'll pay it with interest. If I'm receiving my refund, I will receive it with interest. If I'm paying my demand, I'll pay along with interest of 1%. I'll pay it with 1%. But if I'm receiving refund, I'll receive it with 0.5%. Yes, it's a very patriarchy kind of a model where I am paying 1%, but I'm giving back only 0.5%. But that's how the law is. That's how the law is. So you're receiving giving effect order, paying the demand, receiving refund, as the case may be. As the case may be. Clear? Yes, that brings me to the last 3 steps, people. Something which you are probably not much aware about, but I'm putting it out to you. First, what is happening is, if you have a TP matter, there is a law in income tax which comes and says, if a TP adjustment has been made, and it has been accepted, meaning it's reached its finality, and you have decided that India has been losing money, I will not permit it. Why should India lose money because of a cross-border transaction? Income tax mandates that you have to go back to your associated enterprise and you will have to tell him that, boss, I ended up paying you more. I want my money back. So this is a TP adjustment which happens. We call it very famously as secondary adjustment. Secondary adjustment is basically income tax saying that if a TP adjustment has taken place and money has been moved out of India, I want that money back in India. In 90 days. Within 90 days, you'll have to bring the money back to India at any cost. Failure to do so will be made an assumption that you have given a loan. Made an assumption that you have given a loan to your associated enterprise, and you will have to charge interest on this. You'll have to charge interest on this. Now, why is this significant, people? People don't understand the fact. This is a very live case that happened in my company. My company was a loss-making company. In my loss-making company, technically there is no profits. What happened is income tax department TP assessment happened, and in the TP assessment they made 5 crores disallowance. I said, good, make disallowance, no problem. It doesn't matter because I anyway have losses. And fortunately for me, people, the 8 crores period was also expiring. So I was like, you make the disallowance, it doesn't matter to me because I will anyway have losses which I was getting wasted only. I might as well set this off. Because I set it off, my income became 0, my tax became 0, and therefore I decided I don't want to go for an appeal. Correct? Yes. Now I went to my boss, my corporate finance head, and I told him, sir, they have proposed a 5 crores disallowance, but thankfully the news for us is we will not have a single rupee tax to pay because I have enough losses which was anyway expired. My boss immediately comes to me and says, then what is the point of going on an appeal? Let it go. I said, no, sir, that's a mistake, because even though I will not have to pay tax in India, the 5 crores which I have ended up paying to my AE, I will have to bring it back. Which means even without an appeal, I will have an obligation now to go back to my parent and ask him for the 5 crores. You tell me, will the parent pay that? He said, no, Rahul, no chance they will pay you that 5 crores. I'm like, then you don't have an option. You will have to file an appeal. While the outcome may not give you anything, it is important that you file the appeal. Otherwise, you will have to get back that 5 crores. If you don't get back that 5 crores, for lifelong, I will have to make an assumption that I have given a loan again to him. Which means I'll have to collect interest. This is something which TP students are not aware about. Yes, you should be very careful on the fact a TP adjustment is a very risky adjustment, because even though the TP adjustment may not have an impact on your income tax, it will have an impact on your cash flows. This is something called secondary adjustment. Is the background making sense? Yes, let's keep that thought. It is secondary adjustment for TP adjustments. Secondary adjustment for TP adjustments. And then you see something called paying additional taxes alternative. There is an alternative measure given, people, where they say, if you don't want to bring back the money, you pay me some extra money, I'll let you go. That is called paying additional taxes. What is it? How is it? Discussion later, not relevant right now. Yes, so paying additional taxes, alternatives. Now, people, I'm done with my secondary adjustment also. Order has come in my hand. They have raised a demand. I have to pay my demand. Is the only thing which I have to pay? Obviously, people, if I have underreported incomes, they will start levying step number 29. Which is penalties and or prosecution. A penalty is money which you pay for default. Prosecution is jail time. Directly jail time is what is prosecution. Yes. This has now been introduced last year, Jan 2025, first attempt where they're going to test you on this, people. A concept now called as compounding. Any idea? Heard about this? Very good. Compounding is a get out of jail free card. Yes, in a very simple words, you've learned in Monopoly. In Monopoly, you would have seen there is something called get out of jail free card. Compounding is basically going to income tax department and saying, sir, I know I'm ready to go to jail, but I'm not interested. Tell me, is there any alternative? Department legally will tell you, yes, you pay me money, I will not put you in jail. This is a very, very rude way of doing it, people. It's a bribery thing, but legal bribery. We call it compounding. Compounding is where you can pay money to not go for jail time. It was never there until last year. September 2025, they now introduced the rules for compounding, which is equally applicable for your examinations. It's a very, very difficult kind of a process, people, which you'll have to understand carefully. We will do it together. We have something called compounding. Yes. Last step, people. I have told you who should pay, who should go. Now the question is very simple. Imagine a company has done the fraud. Someone has to go to jail. Who will you send to jail? You get my question? A company has done the fraud, someone has to go to jail. Whom will you send to the jail? The shareholder because they are the owner, the director because they were managing it, or the person who did the default? It's two of those. It is directors and the person who's done the default. Shareholders obviously cannot be questioned, but the directors are equally responsible for their management team. Yes, so here is where I will now have to define the liability. I will decide who should be penalized. Who should be penalized? That is what is called AO is defining liability. AO is defining liability, and full stop. Last thing which you will do, people, person is begging you to pay the money. He's coming again and again and saying kar do penalty, kar do penalty, de hi nahi rahe tum log. He's very pissed off. Who is it? Income tax officer. Income tax officer has tried his level best, is asking you so much times that you have to pay the money, you have to pay the money, and you are that, carefree guy. Kya farak padta hai, dekh lenge. Yes, in that case, at certain point of time, if he gets pissed off, he can start recovery proceedings. What does recovery proceedings mean, people? He will go and, how will he do recovery proceedings? He will not even take the amount from the bank. He will freeze your bank account. Recovery proceedings, first thing starts by attaching your bank account. They will attach your bank account directly, and they'll come and say this bank account is now in the ownership of income tax department. Until I complete the recovery proceedings, this bank account cannot be used. Now, people, recovery proceedings is one of the most riskiest things to ever happen in life. Understand this carefully. Imagine I am running a return. I have a penalty coming up for 1 lakh rupee. My penalty is only 1 lakh. He should only take away 1 lakh. In my bank account right now, there is 5 crores worth of money. What should he be doing? He should hold back 1 lakh and should be allowing me to use the balance money. Agreed, not agreed? No. Attaching bank account means he will attach your full bank account, which means they will freeze your bank account. Which means from that bank account, not even a single rupee can be taken out. Despite the fact that you only have to pay 1 lakh, you will not be permitted to take a 1 rupee outside of the bank account. The whole bank will be seized, and that becomes a big risk for you. Why? People, all transactions needs to happen from bank only, which means your business will literally shut down. That is what happens in an attachment. It's a very, very risky thing, people. And the problem is you can't even go to the officer and say, sir, you need only 1 lakh. No, let me pay you the 1 lakh and close the matter off. He will not accept. He will say, I'm sorry, until the proceedings are going on, I will not touch this bank account. And the proceedings can go up to 6 months, which means for the next 6 months, you have nothing to do. You can literally do nothing from the bank account. The bank account is seized. You have no other bank accounts going on. They will freeze your business. Nothing will happen in the business. That's how serious things can happen in an attachment. Yes, whenever an attachment has happened in India, 99.9% the business is closed because the persons had nothing to do with that business. Yes, I don't know how many of you have heard about this, people, the very famous Harshad Mehta scam. Anyone? Yes, you've seen this very famous web series called as Scam 1992. For those who remember the Scam 1992, people, you would see one scene where basically what would happen is he would have taken some 500 crores from a bank and he was ready to pay it back also. He had enough money in his bank account that he could have paid it back. Had he paid back the money, did anyone would have found out the mistake? No, he was never able to pay back the money because some point of time you would have realized after some issues there was an income tax raid, and during the income tax raid they had frozen his bank account. Now his bank account had about 4,000 crores, but he was not able to pay a single rupee out because his bank was frozen. That's where the whole problem started. Because he was not able to pull out a single rupee, that whole golf course wala scene hota hai, where he'll come and say, I'll sell you my shares and I'll get money and everything. Yes, he was not able to do that also. When nothing was being able to done, SBI found out, yes, this boy is doing fraud. At that stage is when the whole process started. Raids and all started. Business was completely shut down. The guy was not able to sell his shares also because no money coming. Bank account is frozen. No money is going out also. Full business got lost. At that stage is when Harshad Mehta got a heart attack in the middle of a police station and he died off. True story, because here is where the problem started. The moment they attach your bank account, you are stuck in life. Cannot do any single thing as a transaction. Had they kept his bank account open, he could have easily paid the 500 crores and matter would have solved there itself. Now, he did not even have that much of an obligation, just 500 crores out of 4,000 crores. He could have easily paid the money and closed the matter off. He could not do a single rupee transaction because the bank was frozen. That was a very, very, how would I say, political way of handling things. The person who froze his bank account itself knew that yes, he had enough money, he could have settled the matter off. But the other guy, the bank, I forgot his name, which bank it was, the person whom he discussed with the golf course, that guy was involved with the matter. So he went to the persons and he came and said, no, freeze his bank account, don't let him do any transaction. So he was involved in the whole corruption process where he made the bank account frozen, because of which Harshad Mehta got to this point. Had this guy never got intervened, bank would have never been frozen, payment would have happened, matter would have solved. It was a very, very political way of handling things. Attachment of a bank account is the most serious thing to happen in life. If it happens, you are screwed, literally screwed. That is what happens in an attachment process. Clear? Yes. People, if imagine you don't have enough money in bank account, what will happen? They can do recovery from other things also. They can attach your assets. They can attach your assets. They can take away your assets. They can take away all your buildings, everything. On the asset, they will put a big notice. The notice will come and say, this is now the property of income tax department until matter closes, which means this asset will never be able to sell off. Everything will get attached off. Until they recover their full money, they will attach every bloody thing in your life, which means तुम्हारे हाथ में कुछ भी नहीं रहेगा. Nothing will be there in your hand. Everything will be income tax departments. That is how serious attachment of a case is. Yes, yes. So they can attach your bank account and then they can go for non-payments. At this stage is when you have settled your whole matters off, is when income tax finally rests. And then you start over the same process for. Yes, yes. This is how your income tax format looks like. Are we clear? Yes, yes. A beautiful golden rules taxation model, people, where now you at least would have an understanding that when you start a process, where do you start and how do you have to end the whole process. All the things are covered in this, and I can promise you, if you have done these 30 steps properly, your syllabus is done. Yes, the syllabus is split over multiple chapters. Some chapter has here, some chapter have here, some chapter has here, but all compiled together is what your 30 steps is. What is missing in this golden rules, to be very honest, is the last part of your syllabus, something called as other laws, where we have something called as Black Money Act, we have something called as model tax conventions, application of treaties, anything called as double taxation relief, and then finally something called as latest development in international taxation. These are not part of income tax concepts, so that alone is missing in this. But apart from that, this should cover all your topics. Are we clear? Yes, yes. Any doubts before I proceed forward? Is the steps making sense? I've tried my level best to explain things, people, to you, but again, detailed explanations of all these concepts will be done when we take over the chapters of. This is what the high level understanding of the whole topic is. Any doubts? Good to go? Sure about it? Yes, perfect. With this, we are moving on forward to the next chapters of. Now, if you look at the golden rules, people, the computation of tax happens at step number. Step number 9. The computation of tax happens at step number 9, but I always feel like it's better to read that first and then move on to the balance chapters, because yes, fun chapter at the same time makes it easier for you to convince on income tax. Yes, so that is what I always do first, and then we move on to the heads of income. Now, if I understand the steps properly, we are done with step number 1, or we should be doing step number 1, which is identifying the question. We have also moved on to step number 2, which is identifying the person. Residential status will be discussed separately with you in non-resident taxation, so we will not get to that part right now. Step number 3 is what is determining incomes which are taxable or not. Scope of total income, part of non-resident taxation. Then exemptions is something which I will be discussing you as we discuss the chapters. So as I keep discussing the chapters, I'll keep telling you this is what it is, that is what it is, and that's what we'll close with. Yes, advance ruling will come part of TP, safe harbor will come part of TP, and advance pricing agreement will come part of TP. Advance ruling will come part of non-resident taxation. Balance 2 will come part of TP of. Yes, apart from that, then starts your heads of income, which we will anyway discuss at a later stages. Yes, now we are going to be starting with what is called as step number 9, step number 11, both together. We're doing step number 9 and step number 11. 10 we'll come back later, people. I need to explain to you the heads of income before I can take you on an understanding of MAT and AMT. So step 10 happens at a later stage. We will now be discussing step 9 and step 11, part of your topic called as rates of tax. Part of your topic called as rates of tax. Now, people, if you and I have to start doing tax rate computations, there are some things which you need to know. There are some things which we need to know. First, 2 golden rules to be starting this chapter off itself. Golden rule number 1, every time you have a total income, please, every time you have a total income, please round off to the nearest. Every time you have a total income, please round off to the nearest 10. Step number 8. Step number 8. Every time you have a tax liability, round off to the nearest 10. Step number. People, by the next class, ये golden rules याद करके आना. Yes, you'll have to remember this old and golden rules, because every time I do a chapter, I'll focus on the steps. Again, people, it's more for your understanding and reference point, because when you do it practically, the steps will help you understand the whole process flow. Yes, step number 14. So you are going to round off your step number 8. You're going to round off your step number 14. Now, people, in exam, rounding off is an important thing to do or not? Rahul, nahi round off kiya to bhi 30% में decimal में चला जाएगा. Does it make a huge difference? Does it make a huge difference? Not on numbers, but as a qualified, yes. People not rounding off in your exams would treat the whole chapter as 0. ICAI has the powers to cut down the whole question just because of the fact that you have not rounded off to the nearest 10. Why, Rahul? Very simple. This rounding off is something which you and I are deciding, or is it something decided by the act? It's decided by the act, which means an act comes and says rounding off, and you still don't round off. You're technically doing something illegal. You have been informed to do and you still don't do it. That ego is not something which income tax requires out of you. ICI will come and say, if you have that much ego, then you don't fit to be a qualified CA. They will strike out the whole question there itself. You're not going to lose half a mark. You're going to lose everything in it. So step number 1, always round off to the nearest tens for the both income and the both tax liability. Correct? Yes. Today's discussion is going to be about individual taxation. We have many persons to be discussed of. The first and the most critical person is individuals. Now, I am giving you this tax rates of individuals not because it is important for you, because at the end of the day, when we do our sums, we will be majorly focusing upon company taxation. Yes, individual taxation, which I'm teaching you right now, is specific for you to discuss only on a chapter called as DTAA. Is only for a chapter called as DTAA. DTAA is the only chapter where you'll be focusing on individual taxation. So only to that extent this is more relevant at CA final level. You've already discussed this in length in CA inter level. Yes or no? Yes. On the top of my head, people, help me out. When it comes to individual filings, what do you have to keep in mind? You have two kinds of regime. One is called as normal regime. Default. It's called default and optional tax regime. Yes, this was a change which was happened last year, people. It is never called as old and new regime anymore. It is now called as default and optional tax regime. Now, I know it's not something relevant. Why, Rahul? You can tell old also. The problem in exams is, this is where it will stop. Yes, in exams, they're not going to use the word old regime or new regime. They're going to use big Englishes. Yes, big English will start saying paying tax as per 115 BSc, meaning default tax regime. He has decided to opt out of 115 BSc, optional tax regime. He has decided not to opt out of default tax regime. This is a weird thing which happened. Now, this has never been tested, people. September 2025, worst question came in DTAA. Line, no one read, including me. When I was reviewing the paper, I also did not read. Line says, you are required to compute tax of Mr. A, assuming he does not opt out of default tax regime. You could have might as well said opting for 115 BSc. Yes, which means reading the double knots is the matter here. Yes, not of not becomes yes. Yes, so that is how you have to read these things, people, which is why it is called as optional tax regime. Yes or no? Yes, help me out. When it comes to optional tax regime, income tax says you have 3 rates. Help. 3 rates, people. Help, no. मैं लिख रहा हूँ तब तक. हाँ. What are the 3 rates? 0 to 2.5 lakhs. हाँ. 2.5 to 5 lakhs. People, ego मत दिखाओ. पढ़ना तुम्हें ही है. पढ़ो. 5 lakhs to 10 lakhs. Above 10 lakhs. Numbers are 0, 5, 10, 20, 30. मेरे को डर लग रहा है बहुत ज्यादा. Yes, next 0 to 3 lakhs, 3 lakhs to 3 lakhs to 5 lakhs. 5 ऊपर हेडिंग देख. 5 lakhs to 10 lakhs. Above 10 lakhs. Numbers are 0, 5, 20, 30. Very good. Last one. 0 to 5. 5 to 10. Above 10. Numbers are 0. 5 नहीं है? Sure है? Okay. 0, 20 and 30. This is what the tax rates are. Yes. Which one is for what people? Young citizens. Oh, less than 60 years. Okay. This one is for less than 60 years. 62. 62. Very good. 79 years. Above or equal to 80 years. Correct, not correct? Yes. Question. People, I am a non-resident, 85 years. Slab is 2.5. Non-resident with 80 years is still a normal citizen. Is still a normal citizen. So it is not 60 to 79 people. It is 60 to 79 for resident citizens. For resident citizens. Here also it is for resident citizens. Agreed? Yes, be very careful on this, people. Non-resident adds a normal regime, which means this is less than 60 years plus all non-residents. Plus all non-residents. Agreed? Agreed. Be very careful on this part as a discussion of. Yes, now you would have already learned this in inter, people. My birth date is sitting on 1st April 1965. My birth date is sitting on 1st April 1965. I am which one? First, second, third? Check kalo calculator. 20, 25. Which assessment you're writing exam for? 26, 27. Which means assessment year, financial year 25, 26. I am at 1965. So which means what will you do? 2026 minus 1965. Age is 61. Which means I am a senior citizen. Correct? Yes. But what if my birth date is 1st April 1966? What is my birth date is 1st April 1966? People, I will become 60 years on 1st April 2026. I'll become senior citizen on 1st April 2026. Tell me, am I a senior citizen? I see yes and no. Why? कुछ तो एक क्लॉज कुछ भी नहीं है. Why? So 26.
Age should be checked by previous year rating.
Less than 60 years. Very good. People, there is a problem, people. You read 60 to 79. It is not 60 to 79. It is completed 60 to 79. It is completed 60 to 79. Understand when is my birth date? 1st April, which means on 31st March. On 31st March, I am 59 years, 364 days, 23 hours, 59 minutes, 59 seconds and 99 milliseconds, 100 milliseconds. Hey, date முடிஞ்சிச்சு. I am at 100 milliseconds. The moment I said I am at 100 milliseconds, it became 1 second. 60 became 1 minute. 60 minutes became 59 minutes became 60 minutes. 60 minutes became 1 hour. 1 hour became 24 hours. 24 hours became 60 years. Became 60 years. You are a senior citizen. You are a senior citizen. Income tax has issued a circular. Circular comes and clarifies that if you have a birth date on 1st April, it is deemed that you have completed the age on 31st March. It is deemed that you have completed the age on 31st March, which means on 1st April 1966 person, he will become a 60 years guy. 1st April 1946 person will become a 80 years guy. Will become an 80 years guy. People, if my birth date is 2nd April, now tell me, am I 60 years? No, I am now going to become 59 years because I am still pending with 1 day. I'm still pending with 1 day. It is 60 years until 1st April. Until 1st April. Are we clear? Sure? Sure? Yes? Perfect. This is what the provisions are. Any doubts on the slabs? Ready to go? Yes? People, when it comes to slabs, 2 things are to be kept in mind. When it comes to slabs, you can be 3 category of persons. Category number 1, you can be a poor person. Category number 2, you can be a middle class person. Category number 3, you can be a rich person. Category number 3, you can be a rich person. People, I'm a poor person. What am I eligible for? Hey, I'm a poor person. Should I pay tax? Pay no tax? Pay no tax. How will I pay no tax? By claiming. Very good. I will be eligible for what is called as rebate under section 87 capital A. Under section 87 capital A. Eligibility amount is when I am eligible, when am I poor? How do you see I'm a poor? My total income is less than or equal to 5 lakhs. My total income is less than or equal to 5 lakhs and I am very good. Hey, can you be a foreign poor? You can't come from foreign and say you're poor in India. Correct, not correct? If you have the money to travel to India, first of all, you're not poor. Yes or no? Yes, you can't be a foreign poor. You can only be an Indian poor. Government does not recognize foreign poors. They only recognize Indian poors. You should be a resident individual. Eligible amount is 12,000 or tax, whichever is very good. Not eligible on like nope. Not eligible on very good. Not eligible on 112A. Only one income is not eligible for rebate, people. Everything else is eligible for rebate. You are perfectly permitted to claim rebate on every single item. Yes, sir. Yes, good. I am a middle class person. Any problems? Any problems? Will I add anything? Will I reduce anything? Nothing will happen. Answer will remain as it is. Answer will remain as it is. I'm a rich guy. I will be liable for surcharge. I'll be liable for surcharge. Hey, section number. Very good. Surcharge is part of Finance Act. It's not part of any section. You will not find it in section. You will find it in the same place where rates are given. Where rates are given. Yes or no? Yes. Surcharge, people, help. Up to 50 lakhs. Up to 50 lakhs. No surcharge. 50 lakhs to 1 crore. 10%. 1 crore to 2 crores. 15%. 2 crores to 5 crores. 25%. Above 5 crores. 37% is what I'm going to levy surcharge on you. Is what I'm going to levy surcharge on you. People, surcharge is on. Very good. Surcharge is on tax. Up to 50 lakhs means my total income. Yes. Question, people. If my total income is 51 lakhs, forget everything else. If my total income is 51 lakhs, up to 50 lakhs, no surcharge. For the 1 lakh, surcharge of 10%. True or false? You ignore that. I'm telling you. Why? It is not a slab concept. It's a flat rate. It's a flat rate, which means on the full 51 lakhs, I'll be liable for 10%. It is not a slab concept. Slab is only for incomes, not for surcharge. Surcharge, if you are at 1 crore 5 lakhs, I am liable for tax surcharge of 15% on the full number. It's not on a slab concept. It's not on a slab concept. Agreed? Agreed? Any doubts on this part? Clear to go? Yes, very good. This is what the old tax regime looks like. Any doubts? Clear to go? Yes, perfect. This brings me to the next concept called as default tax regime. Default tax regime. Help me out. Section number 115 BAC. Very good. Now, this is the most important thing for your exam because fully amended. Current year has new rules. From the current year, people, things have become a little more nicer and easier. Provision says for every incremental 4 lakhs, there will be an incremental 5%. Which means the slabs now say for the first 4 lakhs, slab is 0. Then for 4 lakhs to 8 lakhs, slab is 5. Then 8 lakhs to 12 lakhs, slab is 10. Then 12 lakhs to 16 lakhs, percentage is 15. Then 16 lakh to 20 lakh, slab is 20. 20 lakhs to 24 lakhs, slab is 25. And then above 24 lakhs, answer is 30%. This is what the slabs are. Yes, it's a more convenient slab, people. Last year slabs were pathetic. Yes, useless slabs. It was 0 to 3, 3 to 7, 7 to 10, 10 to 12. Something is going on. Yes, incremental 0, 4, no, 0, 4, 3, 2, then again 3. Something like that was happening. Now it's an incremental 4 everywhere. It's an incremental 4 everywhere. This is what the slabs are. Yes or no? Yes, this is what the slabs are. Any doubts on this? Now, people, this will apply for resident, non-resident. It will apply for both senior, non-senior. Doesn't matter. In default regime, whether you are a senior, you are a non-senior, whether you are at resident level or a non-resident level, the answer will not change. The answer will remain the same. That is what the slabs look like. Yes, the challenge is happening here. Income tax again says if you're a default tax regime person, you can be rich, poor, middle class. People, if I am a rich person, I am eligible for surcharge. How is it? Acha, let's do the poor first. Format same rakhte hain. If I am a poor person, I am eligible for rebate under section 87A. Is the section number changing? No, the section number remains the same, but the amendments are going to be like this. Income tax says you are eligible to be a poor person up to very good. You are eligible to be poor up to 12 lakhs. This is what the new limits are. This is what the new limits are, which means up to 12 lakhs you are poor. Up to 12 lakhs you are poor, and here you will get a rebate of help. Okay, let's do this. People, take your calculators out. Tell me what is my tax up to 12 lakhs. 60 lakhs, huh? Help. 60,000. Very good. If you help me out, people, 0 to 4 lakhs tax will be 0. 4 to 8 lakhs is 4 lakhs incremental with 5%, which is 20,000. Here the tax will be 40,000 because the rate is just doubling, which means the answer will be 60,000. Rebate eligibility is 60,000 or tax whichever is lower. But here is where the fun starts. People, 2 years ago, when income tax was preparing the income tax return for assessment year 24-25, yes, it so happened that in the middle of the year, between the month of 10th July to 12th July, there was suddenly an update in the income tax return. As per the update of income tax return, it suddenly what happened is income tax made an assumption. CBDT made an assumption saying that any person opting for default tax regime should not be given any rebate on special incomes. Everyone went and fought with income tax department saying, sir, the section 87A says you can't claim rebate only on 112A, which means apart from 112A, you can claim rebate on anything. But then income tax department comes up with the notification as a press release. They inform a press release and they came and say, this is what is our position. We don't change it. We will not give you rebate. People got pissed off. People went and filed a PIL. The PIL got rejected saying this is not a public matter. This is a legal issue. You have to file a writ petition. People ended up filing a writ petition. High Court approved the writ petition saying there is no provision in the law which says default regime will not be permitted for special incomes. You will only deny 112A. Everything else is permitted. Despite the court coming and giving a confirmation, income tax did not change the utility, neither for the last year nor for the current year. Now, 2 days ago, income tax has now released a circular. They have now released a circular where they have said, we will stick to our position. We will still not give you rebate, but we'll give you a benefit. If you are going to have a demand because of this, you don't have to pay us interest. Meaning you have to pay the tax, no doubts about it. You will not be given a defensive position. Yes, although the good news is this is still a circular, not binding, which means I can still file a appeal. But the funny thing what happened is, people, after all this dispute going on, when High Court had filed a writ petition and confirmed that this is allowable, Nirmala ma'am got woken up. Finance Act 25 came up and said, I will stand with my colleagues. I will stand with my colleagues, and therefore I'm passing an amendment. The amendment now comes and clarifies that if you are opting for default tax regime, you will not get any benefit for any special incomes. You will not get any benefit for any special incomes, which means if you are opting for default tax regime will only give you this benefit for normal incomes, will give you this benefit for normal incomes. That is what the provision says. That is what the provision says. Are we making sense? Yes, yes. Now I have some questions on this which we'll come back to later. Yes, but right now, if I'm not a poor person, I'm a middle class, any issues? No issues. If I am a rich person, I am eligible for surcharge rates, surcharge rates up to 50 lakhs, surcharges 50 lakhs to 1 crore, 10%, 1 crore to 2 crores, 15%, and then very good, above 2 crores rate is 25%. Income tax confirmed. If you're opting for new regime, no 37 as a rule. No 37 as a rule is what the provision clarifies. Is what the provision clarifies. This is what the provisions are. Clear with me? Any doubts on this part? No? No? Good. Now, before I proceed forward, let me also give you the special rates. Let me give you the special rates. What are the special rates, people? Help me out. What are the special rates? What tax rates am I talking about? What kind of incomes do you know which are special in nature? First thing is your capital gains. First thing is your capital gains. People, if it is capital gains, what is the capital gains I have? I have section 112, which is my LTCG. I have sections 112, which is my LTCG. Tax rate is very good. It's amended for you people. It is 12.5 now. It's amended for you people. Until last year it was you have to check for 23rd July and all, but that's all gone. For you it is flat 12.5. If I am at section 112A, which is again LTCG. People, I'm being fast on this because I'm assuming you know this. If you think I'm being fast, let me know. I will hold back. No problems on that. Yes, rate is 12.5. Hey, exceeding 1 lakh. Very good. Exceeding 1,25,000 is what the loop sits. Yes, then I have section 111A, which is short-term capital gains. Rate is very good. The amended rate is 20%. The amended rate is 20%. This is what the slabs are. This is what is the slab. Clear? Yes, yes, very good. Other rates, I have casual income. I have casual income. What does casual income mean? Any lottery winnings, gambling, betting, all those kind of incomes which are not business oriented, tax rate becomes 30% flat. Tax rate becomes 30% flat. Then I have something called online winnings, which is again 30%, again 30%. Then I have something called as, what is that? We have something called VDAs. We have something called VDAs. What is VDA, people? Nothing but your cryptocurrency. Nothing but your cryptocurrency. Income tax says if you're going to sell cryptos, even though it is a capital gain, it will be liable for a tax rate of 30%. I will liable for a tax rate of 30% is what I'm going to tax you on this. Some other things which you should know from a final level perspective. Is what we call as transfer of carbon credits. Income tax has said if you're going to have any kind of carbon credits, If you're going to have any kind of carbon credits, you have that benefit in your hand. It's an asset in your hand. This asset, if it's what you're going to sell, this asset is what you're going to sell, you're going to have a tax rate of only 10%. You're going to have a tax rate of only 10% when you're selling carbon credits. And the last thing which is there is something called royalty on first time inventions. On first time inventions. Now I'll be discussing everything in detail in the next class, don't worry about it, but I'm just putting it out to you. Yes, royalty on first time invention is income tax coming and saying if you're receiving royalty on an invention you have made in India and you are the first rightful owner, you are the first rightful owner, you can opt for a section called as 115 BBF. You can opt for a section called as 115 BBF and be taxed at a flat rate of 10%. Taxed at a flat rate of 10% is what you're going to do. Is what you're going to do. This is what the tax rates are. This is what the tax rates are. Are we clear? Yes? Any doubts on this part? Good to go? Perfect. With this, let's do some 2 questions and then I leave you for today and then we do the balance in the next class. Let's try. Check करते हैं आपका इंटर कितना अच्छा हुआ. People, if you want to refer your books, you can do it. Concept guide में सब है. The 115 BAC is in chapter number 3 and the normal tax rates in chapter number 2. Yes, you're free to use your books. मेरे को कोई problem नहीं है. Illustration 1. Illustration 1. Yes. Compute tax of Mr. Param. Compute tax of Mr. Param. Age 32 years. Compute tax of Mr. Param. Age 32 years. Having following incomes. Having following incomes. Yes, I'm going to split the page into 2 people. One is called ATR. What is ATR? Old regime. We call it OTR or ATR, optional tax regime or alternate tax regime, whatever works. Yes, and the right side is called DTR. The right side is called DTR. Basically, what I'm going to do, people, I'm going to tell you one head of income, and the head of income would answer in ATR, the head of income would answer in DTR. You're going to tell me what the tax computation is on either side. Is on either side. Yes, yes, help. I am going to tell you that when it comes to ATR, my salary income is 3,45,000. My salary income is 3,45,000. Yes. My salary income is 3,45,000. But if I'm going to DTR, the income has become 7,84,000. 7 lakh. You have denied exemptions. I would have denied you RA and stuff and yes, so I would have denied you those things and that. People, now before I proceed forward, let me clarify. When I have told you these are the following incomes, when I give you the salary, it is assumed that this is after standard deduction, which means you don't need to do any further adjustments. Don't end up doing any further adjustments. Here is a hint in exam. When they say he is receiving salary, that means it is without deduction. But when they say this is income from salary, it means it is after deductions. I will give you those topics. We will give you this understanding later. Right now, this is your computation model. Yes. Next, I'm going to have section 112A. I'm going to have section 112A. कितना आया? हाँ. So I'm going to have 112A, which is 1,40,000. कितना आएगा? 4,85,000 आया. Total income 4,85,000 आएगा. Check कर लो total. हाँ, 4,85,000. And then I have 112. I have 112. 112 is going to become, let's say, 12,000. 112 is going to become 12,000. Yes, yes, this is what your income statement is. On the right side, nothing is going to change, which means income is going to become 1,40,000 and income is going to become 12,000. Income is going to become 12,000. This is your facts. This is your facts. Compute tax. numbers आए नहीं आए numbers आंसर किसका तू सेम नंबर दोनों का ओ हाउ लकी मेरे को नहीं पता मैं तो ऐसे ही डाला नंबर्स give me whichever side you got the answer as कौन सी साइड का क्या आया डिफॉल्ट टैक्स रेजिम का 3510 ओके तो ओके मैं बस डाल के रखा हूँ सही होना नहीं होना इज अलग कॉन्वर्सेशन 3510 आया तुम्हें अच्छा नेक्स्ट एनीवन एल्स क्या चाहिए टैक्स रेट्स लास्ट पेज में चैप्टर के लास्ट पेज में क्या 35 on the right side okay left side 3670 6760 okay anyone else पीछे एक पर anyone online numbers எங்க லெஃப்டா ரைட்டா 19 okay 3510 okay 5200 राइट सेम है डिफॉल्ट अच्छे से आ गया people this is hardly 1 mark in exam can't spend too much time बताओ 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 answer is answer is answer is okay 6 7 नहीं है अच्छा इंगे सेस पोटिया 6 9 yes yes okay let me give it a shot people if I'm looking at my tax what is going to happen I'm on the left side yes I'm going to first compute my tax on salaries how much is my tax on salaries how much is my tax on salaries people I'm at the age of 32 for the first 2.5 lakhs 0 for the balance 5 percentage for the balance 5 percentage number becomes 2 2 4 help karo re 4750 4750 I'm coming to 112a 112a says for the first 1.25 lakhs no tax so removing 1 lakh 40 में से 1.25 lakhs number becomes 15,000 के पहले 12.5 percentage number becomes 1875 correct yes then I have 112 number is 12.5 percentage on 12,000 number becomes 1,500 correct yes totaling the tax number is 8650 correct yes on this I can now claim why my total income is less than 5 lakhs my total income is less than 5 lakhs I can claim rebate amount will be हाँ पूरा 8650 करेक्ट 62 क्यों very good people you cannot claim rebate on 112A which means you ignore that and you take the balance which becomes 6250 number becomes 1875. Here's the hint for you people. When you get a rebate question, 99.99% tax will be nothing but 112A. That is your hint, which means you should bare minimum have that as your answer. 1875 becomes your answer. Adding cess. Cess कौन मिस किया? मिताली के मुंह से दिख रहा है. People, you can't miss out cess. Cess is a bare minimum thing you should be aware. I should not be telling you those things. Plus 4 percentages. Number is 75 totaling to 1950. Totaling to 1950 is my tax liability. Yes, 5200 कहाँ से आया? अच्छा, you took the old rules. Good enough. 6920 क्या की? மறந்துட்டியா இல்லைன்னா என்ன எடுத்த நீ? Okay, எனக்கு புரியல but okay. Yes, good. I'm on the right side. On the right side, I'm now again computing tax on salaries. Now people, I'm in new regime, so be careful. My first 4 lakhs is not taxable. For the balance 3,84,000, I'm taxing at a rate of 5%. Number becomes 19,200. My 112A remains the same, therefore 1875. My 112 also remains the same, therefore 1,500, totaling to 2257. Totaling to 2257, on which I have to claim a rebate. People, amount of rebate बहुत ही बढ़िया. Amount of rebate is 19200. Amount of rebate is 19200. People, the amendment of current year comes and clarifies you can't claim rebate on special incomes. Claiming rebate only on normal incomes. Number becomes 19200. Answer gives you 3375. Adding cess on this 135, taxing to the number of 3510. Taxing to the number of 3510 is what my tax liability is. Amendment of current year, people, please be very, very careful on this amendment. Yes, you can't claim any rebate on your special incomes. Are we clear? Yes, everyone? Good? Yes, good. I'm giving you a homework question, people. You take it down and you bring it up in the next class. Illustration number 2. Compute tax of Mrs. Sundari. ऊपर परम है, नीचे सुंदरी है. हाँ, परम सुंदरी. Yes, compute tax of Mrs. Sundari, resident, if her income is case A total income of rupees 5,03,000 under ATR. Case B total income of rupees 12,10,000 under DTR. Case C total income of rupees 2 crore 1 lakh under ATR case D total income of rupees 5 crore 1 lakh under DTR. Yes. सॉरी माँ, उतना रिच हुआ नहीं मैं अभी, तो zeros भूल जाता हूँ मैं. Yes, this is what the question is. Now, I'm assuming you understood what I'm trying to test you on, but nevertheless, try it out from your side. Try it out from your side and bring it up in the next class. Let's see if you get the right answer. People, ये concept मैंने नहीं पढ़ाया. I'm making it very clear to you. I have not taught you this concept. Should know from inter. Should know from inter. If you have known it, then great. Otherwise, we discuss it in the next class. Yes. Tomorrow's class, people, I'm going to give you some heavy questions. I'm going to give you some heavy questions. I'm going to give you a complete detailed question, and we're going to see if you're able to understand those questions of. Yes. So, if you want, please prepare and come for the next class. Yes. Yes. Perfect. Thank you, people. Have a good day.
Thank you.
Thank you.